Hello options traders, and welcome to the weekend update here. This is Saturday, October 21st. We've had a rather tumultuous week this last couple weeks. A lot of different political things going on. Can't find a Speaker of the House, so our government's kind of stagnant, for lack of a better term, more stagnant than normal. There's also issues happening in Israel and overseas, so a lot of different political events as well as socio-economic events out there in the world right now, which is causing, again, some turmoil in our markets. Now, generally speaking, volatility is a good thing for options traders. However, the shift from low volatility to high volatility, if we have on a lot of trades, can be a little bit painful. So we stayed small back when volatility was low. As volatility is now scaling up, we are scaling up our trades as well. So this is our equity curve. Haven't quite punched to a new high yet, but we're getting close, and we'll take a look at the current open trades that we have in just a moment. But this is, of course, the equity curve. This is the bar chart of those trades that shows all the P&Ls of all the individual trades. This is, of course, the list of every single trade, and of course this is a multi-page list going all the way back to when the service started in December 1st of last year. And also, this is the complete or total P&L of every trade. And as people in the community know, all of these trades are available in the archive trade circle. So every one of these trades, you can go back and you can play every video that surrounds those trades. The video of when I opened the trade, when I adjusted the trade, why I adjusted the trade, when I closed the trade, etc. So all of that is available to subscribers in the alert service. And I'll put a link down below for anyone interested in checking that out. So, and also keep in mind that each one of these trades, if we come back to the equity curve here, each trade that I open, I try to open in a size of $2,500 or less. These trades are usually trades that are going to be open anywhere from 2 weeks up to as long as maybe 8 weeks. And these things trade fairly slowly. This is not day trading where I put out an alert and, it's something that has to be done immediately. These are things that I share that you can get to, take a look at, understand kind of what's going on, how it's going on, etc. Again, there's a video for every opening, every adjustment, every closing that explains my thought process. And in general, with $2,500 in risk open per trade, I usually won't have more than 3 to 5 trades open at a time. So that's going to mean that at a maximum, I'd have about $12,500 in open equity among all trades. And we can see that the return here is exceeding $16,000 in less than a year. So based on capital that's been applied to these, it's over 100% return in a year. Again, my goal is to keep it small size. I also am not trying to make any claims that, I had these results in the past, so I'm going to have these results in the future. This is all about education and learning, specifically how to trade income style trades, predominantly butterflies, some calendars, some diagonals, etc. So anyhow, this is the weekend wrap up. So let's just kind of get into the different trades a little bit here, and also a market analysis. So market analysis wise, if we take a look at our market, this is a weekly chart of the SPX. And this is 3 years worth. So we can see we were running up really, really strong out of COVID. Then we started to get choppy up until October of last year. October's tend to be, problematic months in our market historically. Then we can see that we had a nice rally, sell-off, rally, sell-off. We're just kind of running in waves here right now. But the thing that you should notice is that there is a long-term channel that's in place here. The red line's right here. In fact, I think let's see if I can draw on this a little bit to help out. So we've got this channel right here, okay, Let me go to yellow on that. So we've got, let me try that again. So I don't know why it's not going to yellow, but we've got that channel right there. And again, this is a weekly chart. So, you know, we hit a top, we hit a top, we hit a top, and then we sold back off. But each time we're pulling back to that line. Again, this is on a weekly chart. Now let me just change this to be a daily chart here. And if we go to a daily chart, let's go to 3 years, 1 day, and then I can shrink this back in a little bit. So again, here we can see that I've got this trend in place right here. Now, in addition to that trend, a couple of factors are making me think that we might stabilize and hold here unless we get some really bad political news. Maybe war escalates beyond where it is right now in Ukraine, in Israel, etc. Many times that will create issues. Our government continues to have challenges. There's now another government shutdown looming. You know, all this craziness in the world. So that can certainly change the outlook of what's going to happen here in the market. But the reason I'm anticipating some holding right there is, you know, we're near the end of October. October tends to be the bad month, so we're likely to maybe, as we get out of October, sometimes you have what's called the Santa Claus rally. So that might cause a stabilization or a reversal in the market. We also have hit that uptrend line, which has held a few times. The other thing you'll notice is this kind of blue squiggly line here. That is the 200-day simple moving average. Now, the 200-day simple moving average is also a little bit of a trigger for long-term investors. When the market pulls back to that point, many times investors will start to come in and buy at that point because they consider it a dip or a pullback in the market. And the more of these things that all converge in the same place, they become stronger. So the fact that we have an uptrend line, the fact that we have a 200-day moving average, I would also say the fact that we have, you know, this prior sort of support resistance line that comes across here. There's a lot of different things that no matter if different people are looking at the market in different ways, all of these things are likely to come to light to them. So for those reasons, I'm thinking that we may be looking at a little bit of stabilization here. Now, if this breaks, and if this breaks with some fierceness, you know, next stop is probably back down here again somewhere. Maybe there's going to be a little stall right about there as well. So those would be the next couple places that I might envision if we do break down, where we would break down to. But again, ultimately, I'm thinking, unless a lot of things escalate, I'm thinking that we might get some stabilization going forward for the next week or two. So let's take a look at our positions as it relates to that. Okay, so two of our positions actually closed out this week for a small gain. We closed out one in Apple, closed out one, I believe it was in SPX, again, for some small gains. So these are the remaining open positions. We have Google here, which is a wheel play. That's where I'm continuing to sell puts on Google, and at some point, Google will get put to me, but when it does, I will have a lower cost basis because of all the times that I sold puts and took in money in that position. This particular position here is one in which it had been a broken wing butterfly, was doing nicely profitable, but had an opportunity to turn this or calendarize this in a big down move this last week and calendarize it when we had the market a little bit in our favor. We had a little bit of backwardation. If you're not sure what that is, make sure you do check out the deep dive calendars and diagonals course. Then the next one here, similar story. It was a double calendar. I don't know why I put an X on that. Let's put a circle on it. I think that's going to end up being a good trade. But that's a deep dive calendar and diagonal, or excuse me, it's a calendar that started off on this center spot here, and then the market moved up to where we had to add a second calendar, and then the market sold off rather significantly this last week to where I added yet a third calendar to this. So I'm going to start thinning out those calendars over this week, next week, but that trade has quite a bit of daily theta coming into it now. The next trade we have here started life as a broken wing butterfly. Then we added this call spread out here, which is very profitable right now, the addition of that call spread. This trade is kind of in the sweet spot, in my opinion. Going to leave it right where it is and let it decay a little bit more. As you can see, we're up a little over 10% in that trade. This trade's up a little over 10%. This one here is something that if our market continues its sell-off on this trade down here, I will have to be adjusting that here this coming Monday. Likewise on this trade that was done in SPY. So I did adjust this one on Friday. This had been a broken wing about here, ended up dropping this down here through a vertical adjustment. That's probably the trade right now that's in the worst shape, but this is going to start to decay rather quickly here over the next week or two. So if our markets do stabilize, our T0 line is going to start moving up fairly quickly in there to get that back to a little bit of profit. And as our T0 line raises there, my goal is going to be to kind of, raise our wings and take out risk on these as I go. So that's going to be kind of the game plan on the various trades we have open at this point. So hopefully that brings everyone up to speed. And again, if you'd like to take a look at the service, I'm going to put a couple links down below. I'm also launching the Deep Dive Calendars and Diagonals course on November 1st. And for the next 10 days, there will be an opportunity to purchase that at a discount, and you can purchase the course at a discount and then also add in, if you want, the alert service itself. You can get 2 free months of the alert service as well on the promotional link, assuming that you purchase before the end of the day on October 31st. That's it for now, everyone. Take care.